How to tackle the $2 trillion illicit finance problem. New recommendations stipulate increased information requirements for payments as low as $1,000. The writer is the executive secretary of the Financial Action Task Force.
In the globalized world we live in, cross-border payments are an everyday necessity, helping businesses diversify their revenue streams, ensuring families can send remittances home, and boosting global growth. This is why the G20 launched an initiative in 2020 to make cross-border payments faster, cheaper, and more accessible.
International payments have drastically changed over the past 20 years with the growth in international payments and the emergence of new payment systems and technologies, including instant payments and fintechs.
This rapid evolution of payment systems unlocks many opportunities, but also brings with it new risks and vulnerabilities. Conservative estimates suggest that illicit finance is a $2 trillion business around the world. And with payment chains having grown more fragmented, it has become harder for financial institutions to get the information they need to identify suspicious activity, such as fraud and money laundering, and to comply with sanctions. It has also become harder for law enforcement to access and investigate relevant information.
With the value of cross-border payments expected to rise above $250 trillion by 2027, it is crucial that we address these risks to make the financial system a hostile environment for terrorists and criminals.
Therefore, to prevent criminals and terrorists from exploiting these gaps to move dirty money under the radar, the Financial Action Task Force has updated Recommendation 16 of its standards, which lays out the international requirements on cross-border payment transparency. The updated recommendations include new standardized information requirements on what information should accompany payment messages for cross-border payments above $1,000 or equivalent, name, address, and date of birth. The changes also clarify the beginning and end of the payment chain, so that the financial institution where the payment is initiated is responsible for collecting this information, and other institutions handling the payment are responsible for ensuring onward payment messages retain the information, down to the end of the chain.
All of this will help to support the G20 roadmap to make cross-border payments faster, cheaper, more transparent, and inclusive, while remaining safe and secure.
The changes will come into effect by 2030 to allow countries and the payments industry time to update their rules and systems, and the FATF will produce guidance to assist countries and industry to ensure compliance.
With these strengthened transparency requirements, banks and other financial institutions will have more insight into who is sending and receiving money. This will make it easier to detect suspicious transactions and block payments by terrorists and terrorist financiers.
Recent terrorist financing investigations have shown how details such as address information have helped lead investigators to those disguising, storing, or moving funds. As our first line of defense, financial institutions have a real potential to prevent crime and to save lives, but only if they have the right information.
To ensure these changes can be effectively implemented across industry, we have carried out 2 rounds of written consultation, as well as multiple outreach events and technical discussions with industry experts.
The changes also introduce new requirements for financial institutions to use technologies to protect against fraud and error. With financial fraud one of the fastest-growing criminal threats, new measures such as verification of the beneficiary's information or confirmation of payee will give customers important peace of mind that their money is going to the right place.
By promoting the use of new technologies, particularly with harmonized and structured data, the changes will also help to make payments cheaper and faster to process and bring more people into the formal financial sector. With approximately 1.4 billion people around the globe still without a bank account, we need to eliminate the risk associated with digital payment systems so that they become a more appealing alternative to cash and unregulated channels.
Ensuring that the changes are implemented in a way that supports financial inclusion and protects personal data is vital, and the FATF will be developing guidance to help countries and financial institutions to do this.
With the value and importance of cross-border payments expected to rise in the coming years, it is necessary to have the right safeguards in place to ensure the integrity of the international financial system.
Through these changes and our continued engagement with the private sector, the FATF is committed to securing the international financial system against criminals while helping it serve all our needs better.